Alright, hello and welcome to Camel Finance. I'm your boy Camel, and the IMF is calling on governments to subsidise food and energy. I'm a little bit late to this, but here it is from the BBC a couple of weeks ago, week and a half. So, governments should subsidise food and energy, says the IMF boss. And this got me thinking, doesn't this just sound a little bit like universal basic income? So I typed in universal basic income to see if I could find anything, and what I found, universal basic income is apparently coming to America. They are going to roll out like this £500 a month thing for who would be eligible. And you might be thinking, free money? What's wrong with this? Well, there's a number of things wrong with this. First of all, where's it coming from? It's of course going to be inflationary. They're just going to print this money out of thin air. This is also terrible because it's relying on the government to feed you. This is not a good position to be in, relying on the government to feed you, because they can very easily and quickly start to add stipulations. They can start to take things away if they feel like you've said something that upsets them. Ultimately, they do want to roll out CBDCs, central bank digital currencies, and this is absolutely horrible for everyone involved once they get these out. The reason for this is CBDCs are programmatic money. So what this means is they can attach stipulations and smart contracts to this currency. So if you're in the US, this might be a digital dollar. If you're in the UK, a digital pound. If you're in the EU, there might be a digital euro. But the point is that they can issue these. They can pay you your universal basic income and say that if you don't spend it by X date, then you lose it. That's one possibility. They can also do something called product lock-in. This is where they say, well, we'll give you £100 or whatever the number is. We'll give you some number of this digital currency, but you can only use it on food, okay? Or you can only use it on energy, or you can only spend it on trainers. So you don't have the freedom to just do what you want with your money. It will come with product locking. It could also be based on social credit scores, and this is something they have in China. So if you don't know about that, go and do a little bit of research. It's very Black Mirror-esque. It's very, very dark, to be fair. CBDCs will likely come with negative real rates. So this will incentivize spending and prevent you from saving. So negative real rates, meaning that you will have to pay your bank to keep the money in there. And it could be, don't think it might just be, -1, -2%. No, it could be anything up to like -20%. It could be really, really harsh, so that if you don't spend your money, if you don't go out and consume mindlessly in order to prop up their hocus pocus economy, you might have to pay enormous sums of money and essentially lose it just for the privilege of using a bank that uses a currency that takes away all of your freedom and privacy. Any savings you do have could be subject to all of the above stuff, so expiry dates, product locking, social credit scores, so on and so forth, and they can take it away at a moment's notice if they decide that you've done something to upset them. You get zero privacy because, as I said, they can product lock and they can see everything that you spend it on. So, and they are, of course, you might have seen in the news, they're introducing things like biometric payments, face scanning in order to pay for stuff. So you're going to have absolutely no privacy with these CBDCs. And therefore you have zero freedom as well. So this is why I'm such an advocate for Bitcoin, because in life, these are coming. Make no mistake about it. No one can stop them at this point. CBDCs are going to be rolled out this decade. Okay, they're absolutely coming. And this is why I think it's so important that people understand Bitcoin. Because if Bitcoin fails, everyone is screwed anyway. Okay, no one's getting out of this thing without being a digital slave if Bitcoin fails. And this is what the Bitcoin maxis, so to speak, understand. As you know on this channel, I'm not a maxi. I'm not a tribal person. I don't take sides. But one thing I can tell you is, in the future, inside this decade, people are going to be rolling out central bank digital currencies, and Bitcoin is already rolled out. Bitcoin already exists. So if Bitcoin fails, we've all got bigger problems, because we're going to be forced to use these that come with all of these horrible things. Okay? So this is why I'm so passionate about Bitcoin. Bob Lucas here saying that crypto is going through the exodus stage of the 4-year cycle. Celebrity deals are over, unsolicited Discord DMs and scam tweets, they're mostly gone. Retail has been badly injured, licking its wounds. We've got 4 to 8 months to really drive this home, and then there's going to be a new class of being early. The reason I believe in Bitcoin, the reason I think that we need Bitcoin in order to have some level of chance of being free, is because nobody can censor or mess with Bitcoin. If you have Bitcoin, you can use it. You can use it to spend. You can use it to transact peer-to-peer. It does not come with any of those stipulations like product locking or time expirations. People can't do that to Bitcoin. So Bitcoin really is freedom, and if you don't understand that, go back and watch some other videos, go and do some research, read the white paper, make sure you understand this stuff, because there's only two options. Like either you use Bitcoin and have some freedom and some sovereignty, or you're going to be forced to use CBDCs. Once these are rolled out, it's going to be a matter of years, a couple, 2-3 years, before they completely get rid of the original fiat currency system. We are in the final stages of this fiat currency system, and that is why the debt is out of control. That is why they're going to hyperinflate the currencies. That's why I keep telling you that inflation is, they want inflation, it's not going away, because they are going to deliberately destroy the fiat currency system so that they can then bring in central bank digital currencies as the solution to the blown up, failed fiat currency system. So make sure you get some Bitcoin, make sure you store it offline, 4 to 8 months max, and then we're going to hit the 4-year cycle low, and the next cycle was always destined to be the cycle. So with that said, let's take a look at the supply and demand models, the sigmoid or S-curves for Bitcoin's adoption. Bob says here that there's going to be a new class of being early, okay, coming up. We are still super early. The 5-figure price scares a lot of people off. But just look at this. In yellow, we've got the standard stock to flow model, which is a straight line staircase on a log scale, okay, straight up and to the right. In blue, we got the mobile phone S-curve here. So this is the rate at which mobile phones were adopted. And then the grey line would be Bitcoin's price. So at the moment, Bitcoin's price is quite far from the stock to low, and it's a little bit below the mobile phone. If we jump over here, we've got this percent limit model in green, which it's above, and more importantly, the internet adoption sigmoid curve in in grey. From Mr. Timer here, he basically says he went down the rabbit hole. He liked the stock to flow model. That's the one in yellow, but you can read this in your own time and go and see it if you want to see it. But he basically says that he just doesn't quite agree with this thing. He thinks it's too much of a straight line up. He doesn't like the way it just staircases straight up and to the right on a log scale. He also says that he thinks that possibly the halvings aren't going to have as much impact going forward because we've minted more and more coins on the way up towards the 21 million hard cap. I personally disagree with this because it's the miners that are ultimately in control of the network. Every day, more and more miners plug in. Every day, more and more advanced computers plug in to mine Bitcoin and secure the network. And at the moment, they get 6.25 Bitcoin per block for a total of 900 Bitcoin approximately released into the system every day. That's what they get at the moment. In 2024, roughly in the middle of the year, we're going to see that drop to 450 Bitcoin a day. And this is at the same time as more miners will continue to plug in. The number of computers will continue to increase. The power of those computers will continue to increase. Yet the amount of block reward they get is going to half. So they're going to have even more people on the network sharing out half as much Bitcoin per day as is currently being released. So I personally don't agree with this, and I think that this yellow line is going to right itself. But perhaps I'm wrong about that. We'll move on from here. It basically just says that he doesn't agree. He doesn't agree with me. He thinks that this is too much of a straight line up. And so again, go and read this for yourself. But he basically thinks that instead we can modify this stock to flow. So he has modified it to take into account a couple of other things. And after modifying it, you can see that the price is way closer to his modified stock to flow. He also goes on to say that this might explain why the stock to flow model predicted over 100k Bitcoin and we didn't hit that. So maybe, this is one of the reasons that we didn't catch this up, was because this didn't take into account other variables. So if we just track the internet S-curve and can adopt Bitcoin at the rate that the internet was adopted, by 2025, by the beginning of 2025, we should be at 47,000. The demand model, if we followed the rate at which mobile phones were adopted, shows us we would be at 144,000, right? And then the modified stock to flow model in purple being somewhere between these two at 63k. And lastly, he says that this is basically what's keeping him up at night, so to speak. These are all S-curves, by the way, S-curves for adoption of a technology. if Bitcoin can continue and stay in the top portion of this, then enormous numbers are going to come for Bitcoin. But I think what's stressing Mr. Timer out is that what if we get one of these more lackluster S-curves for adoption of Bitcoin? Then the price would not do very well, obviously, especially not compared to if we get one of these ones. Hopefully, we can get an S-curve of adoption for Bitcoin up here rather than down here. But I guess we have to be open to this as being the downside risk for Bitcoin. I'd like to add in here that this isn't really a risk in my view, because as I said before, if Bitcoin fails, we all have bigger problems. We're all going to have no privacy. We're all going to have to use CBDCs. So the demand for sound money, the more and more people understand the requirement for sound money, and the more and more people decide they don't want to use a CBDC, they want to exit the system and have their own money that they control and that no one else can mess around with, no one else can inflate, no one else can take. Okay, the more people realize that Bitcoin is the sound money and is the money of freedom, the more they are likely to want it, and the less there's going to be, because the halving is going to keep cutting down the block reward over time. So this is why I'm so confident Bitcoin is going to end up with an S-curve of adoption here. And as I keep saying, the risk is nil, because if Bitcoin does end up flopping and failing, well, we're all going to be digital slaves to CBDCs anyway. So lastly, here are these numbers from earlier. Zooming out to the end of the decade, you see that we get 70,000 for the internet, 306,000 for the modified stock to flow, and just approaching 600,000 if we can trace the mobile phone adoption curve. If you think about mobile phones, they had to make them all from scratch. They had to sell them all. People had to go through the process of owning them and learning how to use them. Bitcoin doesn't require that. The infrastructure is already there. Everyone is already walking around with a mobile phone connected to the internet everywhere they go worldwide. Okay, it takes no time to create a Bitcoin wallet, to sign into an exchange and buy some crypto and become a Bitcoin holder. The infrastructure is already laid. We don't have to go through this process of building out millions of devices, so on and so forth. The infrastructure is there already, which is another reason I'm so confident that Bitcoin can be adopted at a much higher rate than, say, the internet. While we might be spending some time underneath these, remember that Bitcoin does like to swing above and below. So there's nothing to say that we couldn't swing up here and hit these massive numbers, even if we do have to spend a fair amount of time trading net sideways or below these model valuations. And so before we move into the trading section of the video, got this here from Peter Brand. Peter Brand basically saying that there's no rush here to buy the dip and try to be a hero and call the bottom. He's saying that when the trend actually turns, there's plenty of opportunity to get in and ride it up rather than try to catch a falling knife on the way down. And I saw this and I just thought this is quite a nice thing to lead me into the trading, because obviously I have a S&P 500 position open. If you've been watching the channel, you will have seen me line it up and open it. I've checked the futures and they're down a little bit today, so that's okay. I did say that this is going to probably form overhead resistance, and I also said that this will become major resistance. For me, and I thought this is why I would share this, is Peter's saying let's wait for a trend reversal. Well, how do you know if the trend's reverse? Well, for me, the trend is reversed when we can break out above this top blue line. If we can, bounce up here, maybe get rejected, bounce up here, get rejected, and then go. At that point when we go, that's when I would personally call a trend reversal. So until that point, we're just trading this day by day, taking it as it comes. But a breakout above this line for me would be game on, new highs, big bull run, and would likely require a dovish pivot from the Fed in order to catalyze this. Of course, that dovish pivot from the Fed come alongside a lower high and a breakdown of this parabolic uptrend for the dollar. So hopefully we'll see that soon. This of course would send Bitcoin sky high. Just looking at the date here, I could see a 60-day consolidation cycle for Bitcoin, which would lead us to emerge around the 7th of July. Let's go back to the dollar. We'll mark the 7th of July on here. There. So do we get this sort of move up here and then chop around on top? I don't know. Do we maybe form one more higher high and that's what breaks it? But I would expect to see perhaps the stars align for a lower high in the dollar around this area, and then a true breakdown coming out of there, which will catalyze the bounce for Bitcoin around the 7th of July. But we'll see. Play it day by day. Silver, we are gradually making higher highs. just long and strong at the moment, aiming up here. We'll see what we can do. Not much to do really coming into the weekend, so we'll stay long and strong. Same for gold. And big question for next week is, are we going to make a lower high here, or is this going to be a breakout to new highs? I don't know yet, but we will see. So that's it from me. If you found value here today, I'd appreciate it if you could subscribe, drop a like on the video, follow me on Twitter, and I hope you have a lovely weekend. I know I will be. We've got amazing weather at the moment, so stay blessed. All the best. Cheers. Bye.